Hi, today we're going to take a look at how insurance works in general. What is the purpose of insurance and how do most insurance policies operate at sort of a basic level? And then we'll look more specifically at car insurance. So to begin with, insurance is about managing risk. It's about facing financial risk in a way that helps protect our assets that we've managed to acquire through investment and savings and other means. So when it comes to risk, there are lots of ways that we can deal with it. One is to try and avoid it, though that's basically impossible because life is inherently risky. We could try and reduce our risk, and that's a wise choice because it lowers the possibility of bad things happening. For example, choosing not to smoke or to get exercise or sleep means that our health should be better, and so we should have lower risks of long-term health effects, but not guarantee it, but it does make it less likely. We could try and accept some small risk. That is, we can try and self-insure. We can say certain things could happen to me that are bad, but I can afford to pay for out of my own pocket rather than have to pay an insurance company. So this might be something like not getting the warranty, extended warranty on small electronics at Best Buy or something like that, where, yeah, if we lost our camera were to break and that's a $200 camera, that's unfortunate, and $200 is a lot of money in some respects, but is it worth paying for an insurance policy on something that I probably won't break anyway and that I could afford to replace if I needed to? And the answer there is no, it doesn't make a lot of sense to get that kind of coverage. Or we could choose to share the risk, and that's really what insurance is all about. It's about having somebody else take on the financial risk of bad things happening to me in a significant way. When it comes to insurance, that's what we do. We're managing risk by sharing it with other people. Every single person, it would be difficult for an individual person to replace a $35,000 car on their own. But if we're all paying our insurance policies, then we're all paying into a large pool of money. And so if something bad were to happen, then we're basically all sharing in the cost of replacing the car that got destroyed. And the reason you want to do this is because it protects you against financial loss. Because again, I might not be able to afford that on my own, but when I pool my resources together with lots of other people, suddenly the costs of repairing damages caused by bad driving or by sickness or death becomes a lot more manageable with lots of us rather than with one individual. And there's lots of events in which we face financial loss: illness, death, theft, accidents with cars, or acts of nature like trees falling on your house, things like that. All of these things are risks that incur huge dollar value damages, and we want to have some way to protect ourselves from that, and that's called insurance. There are a variety of insurance policies out there that cover different issues. The most common types of insurance that you'll need include automobile insurance if you plan on driving a vehicle, health insurance, and that's basically everybody, property insurance, either homeowners insurance if you own your home or renters insurance if you're in an apartment. You definitely want to protect the things that you own. Life insurance will be important for those who have spouses or children that are reliant on your income. And then also in many professions you have what's called professional liability. That is insurance to protect you in case you do a bad job and someone chooses to sue you over some sort of malpractice. Not every job has professional liability, but especially things like doctors, lawyers, accountants, teachers, there is a need for professional liability in case you do make a mistake. So these are sort of the different types that you would normally see people purchase. They all operate basically in the same way. To have an insurance policy means to sign a contract between you and an insurance company for financial protection. And every insurance policy basically covers the same basic information. What is being covered and under what circumstances? What is the value of the coverage that you're purchasing? That is, how much will the insurance company pay if there's a claim or something bad happens? It will cover how much you have to pay each month in order to keep that policy, and that payment is called a premium, and a little bit more about that in a second. And how much you have to pay when something bad does happen. What is your share of the costs to fix the problem, and that's what we call your deductible. And again, more on that in just a moment. Premiums are what you pay every month for the right to have an insurance policy. And the premium is based on the amount of coverage that you need and based on the deductible that you have. You pay the premium no matter what, regardless of whether something bad happens or not, whether you get into a car accident or not, you always pay the premium. And the cost of your premium will be dependent on a number of factors, including how old you are or your gender, where you live. Credit history is important because if you tend to have a bad credit history, you tend to be irresponsible, and irresponsible people tend to be unhealthy and to drive irrationally, and can cause insurance companies headaches. And if you're constantly filing claims, you become more expensive to the insurance company, and the more expensive you become and the more likely you are to cost them money, the more they're going to charge you as a premium. Deductibles are what you pay when there is in fact a claim. That is, something bad happens and the insurance company is covered and they have to make a payment to make the problem right again. You have to pay a portion of that and the insurance company pays the rest. Your portion is called a deductible, and how much your deductible is dependent on how much risk you want to take. Basically, if you want very low risk, that is, you don't want to pay a lot of money out of pocket to fix a problem, then you're going to want a high premium, low deductible insurance plan. Because basically what you're doing with that high premium is prepaying to the insurance company your share of whatever bad thing is about to happen. And so that way, when something bad does happen, you don't have to pay very much up front because you've already essentially paid for it in advance. If, on the other hand, you want to take on risk, then you can have a low premium, high deductible policy where you would have to pay a whole lot more if something bad happens. That's sort of the downside. But the upside is that as long as nothing bad happens, you don't lose a lot of money. When you're paying low premiums, you're basically waiting for something bad to happen, but you're not paying for it in advance. So as long as you've got enough savings to cover your deductible, then you're able to get away with sort of lower month-to-month costs by having the low premium, high deductible option. For example, let's say you have a premium of $200 a month for car insurance and that your deductible is $500 and you cause $750 worth of damage to your car. In which case, you would owe a certain amount to fix that $750 in damage, and that certain amount would be your deductible of $500. The insurance company would cover the remainder, or $250. The $200 you paid each month for premium doesn't get factored into this at all because that's just the price you pay to have that coverage in the first place. If you choose to change your coverage, then you have to sign what's called an insurance endorsement, which is basically just a document that explains the coverage and the changes that are being made and then makes it official. When it comes to auto insurance, there's 3 types of auto insurance that you should be aware of on top of sort of your standard coverage. One is called no fault, and in New Jersey they have no fault coverage. Basically means if you hit somebody, your insurance fixes your car, their insurance fixes their car. We don't try and assign fault to the accident, which means that basically if you get hit by somebody else, you're victimized twice. Once with the inconvenience of having to get your car fixed, and second because you're going to have to pay for it through your insurance coverage, which makes your insurance more expensive. Most states are not no fault. You also have uninsured, underinsured motorists. That is, if you get hit by somebody who does not have enough coverage to fix the problem, then your insurance company can sort of fix the problem by filling in the gap. Though you have to pay for that. And then we have what's called assigned risk, and that's basically for those people who are such bad drivers that they cannot find car insurance. The government may choose to essentially force an insurance company to cover those people, but by doing so, those folks are going to have to pay a very, very high premium to get that kind of coverage. With most car insurance coverages, there are some basic required portions and there are optional portions. Bodily and property damage liability are required. Uninsured motorist injury is helpful. Medical expense benefits are helpful. Collision and comprehensive are optional. The cost of your car insurance coverage will be based on your age or your gender, marital status. We find, for example, married people tend to drive a little bit more carefully and as a result get into fewer accidents than single people. Or the type of car. Newer cars tend to be safer and less expensive to fix, especially when it comes to bodily injury, than older cars. How often you drive, whether you're a man or a woman, all these things will affect how much you have to pay. Bodily injury insurance covers the injuries that you cause other people in accidents. So if you send someone to the hospital or cause them to have medical expenses or lost wages, your bodily injury liability insurance will cover those injuries. In Virginia, you have to have a minimum coverage of $25,000 per person injured in an accident, with a maximum of $50,000 per accident. So if you hurt 3 people at $25,000 apiece, then the insurance coverage will cover $25,000 for each of the first 2 people, but then once you've hit the maximum cap for total accident, you have to pay the rest. So you'd have to pay $25,000 for the 3rd person you hurt. Or if you hit a car with 6 people and you cause $10,000 worth of damage to each one of those 6 people, the first 5 would be covered and taken care of, and the 6th person you would be responsible for because you would have hit the maximum per accident level. Property damage fixes the property that you damage or wreck when you get into an accident. So if you break another car's fenders or glass, quarter panels, things like that, those would be fixed by your property damage liability, as well as any sort of guardrails, fences, light posts, things like that that you may also have hit. In Virginia, you need a minimum coverage of $20,000 for property damage, but in this area in particular, $20,000 probably isn't even remotely close enough to deal with the risk that you face. If you crash a brand new Tesla or something like that, car that can cost $75,000 or $80,000, if you only have $20,000 coverage, you have to figure out how to cover the difference between the actual damages and your insurance coverage. So while Virginia's minimums allow you to be on the road, a 25, 50, 20 policy, which is $25,000 per person, $50,000 per accident, bodily injury, and $20,000 in property damage, is probably not enough to protect you and your finances if you get into a really bad accident. If you don't want insurance, you can get uninsured motorist in Virginia. The minimum coverage there is $25,000, $50,000. Again, not remotely enough. You need more coverage than that. Medical expenses would pay, medical expenses coverage would pay for the medical expenses of people in your car as well. That's something that you should consider making sure that you have coverage for, especially if you're normally transporting people in your vehicle. One optional form of coverage is what we call collision. If you hit somebody's car, their car gets fixed. Yours does not, unless you have collision insurance. With collision insurance, your car will also be repaired, but you will have to pay a deductible as part of that repair. So if you have a $500 deductible and you cause $1,500 worth of damage, you'll pay $500 and the insurance company will pay the remaining $1,000. Please keep in mind that when you file a collision claim, your premiums will almost certainly go up. The other option that you can choose is called comprehensive insurance. And with comprehensive insurance, it will cover any other damage to your car that could happen. So falling objects like trees and branches, car catching on fire, theft or vandalism, anything that could happen to your car other than you hitting something with it would be covered by comprehensive. And again, it comes with a deductible, and filing claims under comprehensive will also cause your premiums to rise. Those are pretty much the bare basics of car insurance. We will look at different types of insurance over the next couple of days. Please make sure that your vocabulary is taken care of, and we'll see you in class.